The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this special webinar. Here at Nadex, we are so fortunate to have Adami and Dan Nathan joining us to talk about trading the election. We've definitely seen some volatility in the last week. We're seeing some today. And Dan and Guy are going to talk through things that you might want to be on the lookout for in regards to what could potentially happen as people start to digest the news of the election and we go through the election process. Now, before we flip it over to Guy and Dan, we are going to have to take care of a couple of housekeeping items. The first of which is our disclaimer. This webinar, as are all of our webinars, are also brought to you by our compliance department. And trading on Nadex, as well as any place else, does indeed involve risk, and that all trading decisions you make are solely your own responsibility and are done at your own risk. The last thing I really want to point out as I leave this slide up here for everyone to take a look is that none of the material today should be taken as a buy or sell recommendation. We are doing this for your educational purposes only, so please take it as such. We are not making a solicitation or recommendation on specific trades. The next thing I'd like to throw out there, because today is the last day to do it, Nadex is running a Predict the Dow competition. There's a link. I put the website at the top there, join.nadex.com, Predict the Dow, and it doesn't cost anything. It's free to enter. Make a prediction. All right, there is a qualification that you'll have to have an active Nadex demo account before we actually pull the winner, but it's a closest to the pin competition. Whoever is closest to predicting where the Dow is going to close on November 4th is going to win $5,000. If there happens to be more than one winner, somehow two people hit it on the nose, the prize will be split. But today's your last chance. You've got until 4 p.m. Eastern to enter your prediction. Go for it. You've got nothing to lose and maybe $5,000 to gain. The last thing I'd like to point out is we do record all of our webinars. We make them all available on our YouTube channel. Go to the Nadex YouTube channel. Go, watch, and be sure to subscribe. I also want to point out on Nadex.com, you can also find all of our upcoming webinars. You look at learning webinars, upcoming webinars, and all of our recordings. We have a whole library of on-demand recordings, and this session will be there. It'll be there, and it will be on our YouTube channel. With that, I don't want to take up any more time. I would like to turn it over to Guy Adami and Dan Nathan. Dan, let me make you the presenter here. Let's hope I can get this on the first shot. And was that the one? Or do I got to do the other one?
Try the other one here.
Hang on one second.
just keep hitting buttons.
There we go. There we go. There we go. All right, Guy, take over, buddy. Let's get rocking and rolling here.
I love the preamble, man. That's fantastic. Thanks for having us, and everybody, thanks for spending some time with us. We appreciate it. We know how busy everybody is, so it's great to have you with us for the next half hour or so. And obviously, it's been a crazy couple weeks heading into tomorrow's election. That's what we want to focus on. But Dan Nathan is the master of sharing screens and the charts. And the first one we have up here, Dan, is the S&P 500. But before we even start that, what you make of last week's earnings? By the way, folks, those that don't know, the term MAGA, although used on hats, when it comes to the stock market, Dan Nathan was the person that really introduced that to the finance world. The MAGA complex, as he says, Microsoft, Apple, Google, and Amazon. And it's funny that, a few months later, President Trump actually used that in a press conference, which I thought was fascinating. But your FMAGA complex, when you incorporate Facebook, all reported last week, and it was a fascinating series of earnings. And maybe it's best to sort of we'll just talk quickly about that and then get into what we're looking at in the S&P 500, Dan.
Yeah, no doubt about it. I mean, listen, earnings was the main driver as far as single stock price action last week, but it really seemed to be that the macro was dominated by the election and the potential outcomes. And I think, those are something we're going to focus on in a couple of minutes. But I think it's really interesting that this morning, the NASDAQ 100 closed down 6% on the week last week. It was the worst month since March. And that obviously coincided with some great earnings from Microsoft, from Facebook, from Amazon, and from Alphabet in particular. Apple's were fine. They didn't give any guidance, and therefore, this is a product story. So obviously how their iPhones do is really important. And, we're spending time on this webinar for a second on these names because they're important. They make $7 trillion in market cap. That's 45% of the NASDAQ 100. And the way they go is the way the NASDAQ 100 goes. And usually the way the S&P 500, they make up about 23, 24% of that. So that's why we keep a close eye on those names. But despite the really good earnings, and despite the fact that these stocks all sold off from their September 2nd all-time highs, they couldn't rally on those good news. So that's really important from a sentiment standpoint. And then, Guy, that brings us to potential election outcomes. And you and I see 3 potential outcomes. You want to kind of go through those a little bit because that's really going to dominate right now. But then it gives us the opportunity to think that if we get the outcomes that we expect or that the market expects, and volatility settles a little bit, then it gives us the opportunity to go back to some of the names that we think could power the gains or the declines in the major indices.
Well, I think the one that everybody's concerned about, and the one we should probably start with, Dan, and then you can speak to this, is an election that don't have an outcome on November 4th. So an election where it sort of hangs in the balance, maybe both sides declare victory, and it takes days, if not weeks, potentially a month or so to announce a winner. And I think that in terms of the market is probably the most potentially deleterious to the price action. So that's probably the one I'd like to start with first. But with that said, the question you have to ask, did the market price that in already? Obviously, I don't know the answer, but what I'll say is this, and we're going to have a VIX chart in a little while. You saw the VIX trade up and close right around the 40 level. It's obviously right around there today, but you also saw the S&P move to the levels that Dan sort of outlined. So the one thing I want to point out is this 3,400 level, which we're obviously lower than right now, but the level which is that middle horizontal line, that was the prior all-time high we saw. I believe the date was February 20th, and that's been where we've been trading either side of now, seemingly since I don't know, end of August type thing. Yeah, last 3 months or so. And here we are at 3,300. The level that we traded down to last week, sort of that 3,230 or so level, coincides with the level that we saw probably back around in the summer. So that, or excuse me, the September low, which I believe was 3,210 or so. So here we are bouncing around. The market has basically set the parameters for you, Dan, and I would submit that maybe a contested election to a large degree is already priced in, and that's what, it's one of those things where the market might have given you that outcome already, and the other 2 outcomes might be sort of the tail risk or the tail gains for the broader market.
Yeah, so I don't exactly agree with that, and Guy and I get to fight out this stuff on Fast Money on CNBC most evenings. I see 3 scenarios, okay? So let me just tell you what they are. A contested election, which is going to be just a disaster with a bunch of lawsuits in different counties and states all over the country, with the potential for a Supreme Court, which is obviously highly politicized at the moment, given just this recent appointment by the president. That is a worst case scenario, I think, for the markets right now. I don't think the markets have priced that in. Markets don't like uncertainty, and that would be nothing short of tape bombs every day, every hour, and a whole heck of a lot of uncertainty. So to me, I think you probably have the S&P 500 breaking that 3,200 level and on its way back to 3,000, which was the late June kind of low there. And then let's just talk about what the other 2 outcomes. Right now, the prediction markets, the betting markets, the polls, the final polls, the poll averages, most importantly, are showing Biden with a commanding national lead. And so that's obviously the one that if you were a betting person, that's where you would kind of bet right now with just 24 hours to really the thick of election day here. But there's some other things that come with that, whether the Senate goes with them or not, that sort of thing. And really what's important about that is that we get clarity on fiscal stimulus, on tax policy. These are all the sorts of things that are going to drive corporate earnings, which will ultimately drive the indices, right? So that's really one other scenario. And then the third scenario that I see, and I'm going to let you weigh in on these other two guys, is that Trump pulls out a surprise victory like he did in 2016, and therefore, you know, I think the markets are relieved about that. So I think the markets are relieved about even an upset of Trump, or they're relieved about a decisive Biden win in the next couple of days. And that other scenario that we outlined first, the one without all the clarity, I think that's the one that the markets have a lot of trouble with for.
Yeah, and I think that's what makes markets, right? And my point was maybe we priced that outcome, that contested election outcome, with all the vitriol that surrounds it in already with the move we saw last week. And Dan's suggesting that we may have priced some of it in, but not nearly all of it. And you know, VIX, which is topped out at 40, could go higher, and this S&P 500, which held that 3210 level or thereabouts, could be headed lower. I'll say this, you know, the levels that I see on the downside, if in fact you were to break that 3200 level, probably comes in the form of 2850 or so, and you can do that, you know, if Dan's scenario plays out relatively quickly. So, you know, those are sort of the levels that I've been looking at, and that's what, as I say, makes markets. But again, the question you have to ask yourself, did a VIX spike to 40 price in that potentially disastrous outcome? And it remains to be seen. What I'll say in terms of individual sectors is this, you know, the banks, and I'm not playing stock market here, but I want to bring up the banks because I do think it's important. I mean, the banks have been trading just awful, and Dan can speak to this. I mean, he's been all over this for quite some time. But the banks can't get out of their own way. And I would submit that a candidate Biden victory could signal the next leg lower for the banks. And why is that? Well, maybe regulation comes back in some form. Maybe Elizabeth Warren somehow moves herself into the cabinet. Maybe the crosshairs are firmly on the banks once again. Maybe the yield curve moves in a way that is not advantageous for the banks. There are any number of scenarios that would lend itself to being negative for the banks. That and the fact that they've traded awful now for the last 6 months. For example, Wells Fargo not only made a new 52-week low last week, probably made a multi-year low. Citibank has traded disastrously. Bank of America, not so great itself. The only bank that's really held its own, and we talk about this all the time, is JP Morgan. But with that said, you know, JP Morgan trading either side of $100 is still significantly off the all-time high we saw around 141 or so much earlier this year. So if you're looking for a sector that could really fall under the crosshairs under a Biden victory, in my opinion, comes in the form of the banks, Dan.
Yeah, very interesting heads up on that one, Guy. It was, I thought, really interesting that yesterday there was a story somewhere, maybe it was an Axios, talking about how Biden, if he were to win, that he might put some sort of ban on active senators becoming cabinet position members, which I think is really fascinating, because who were the two really progressive Democratic candidates who were all over the banks, all over regulation? It was Bernie Sanders and Elizabeth Warren. So, you know, these are the sort of tea leaves that we will be reading for a while. If Biden were to win, we know what we get with Trump. We get more of deregulation, more kind of tax, you know, kind of weakness, that sort of thing. All right, let's go to the VIX, Guy, because you know, you mentioned the VIX, and give us a sense of what you think. You know, with the VIX got above 40 a few times last week, when it felt like the market, the S&P in particular, might break that prior low from September 24th. It didn't break that low. It held, and the VIX, while it's come off a little bit, hasn't come off that much with a 37 handle on it. What is the VIX telling you about the potential for outcomes in the next few days with this election, and how do you trade off of a VIX that might explode, let's say, make a new high from the spring, or it might kind of fall back to that mid to low 20s area? How do you trade that?
Yeah, and that's exactly what I'm watching, Dan. I'm glad you brought that up because I mentioned it earlier. So you go back to the early June, the VIX topped out. I think it traded around either side of 40. I think it got up to like 40, 60 or so. And you know, what I've been saying for quite some time now is the fact that despite the fact that the market had been rallying prior to last week, you had a VIX that was extraordinarily stubborn. That 21.5 level had been supported a number of times. And as we got the market continued to rally, the VIX was rallying also. And what I've said on the show, what I've said on the macro setup that we do for both Nadex and IG, is that this rising VIX on the back of a rising market was scaring me a little bit, and I thought the VIX had a chance to trade up to those June highs, and that's what we saw. In terms of what we're looking at today, you know, as we sit here right now, the Dow's probably up 400 or so points, and I would have thought you would have seen more of a precipitous sell-off in the VIX, to your point, Dan, and we're not. The VIX is only off 50 points or so. 37.5 is still extraordinarily elevated. I think you're going to learn a lot on today's close as to what the market thinks. You know, if you see this market continue to hold the gains that we're seeing, but the VIX closes positive today, I think that's really a tell. And I think that could set up for a really dicey few days. So to me, the VIX isn't a trading instrument. It's an instrument to gauge where the next moves of the market are. And here we are with the, you know, the S&P up 50 or so handles, and Nasdaq sort of hanging in there, the Dow up 400 or so. You know, if the VIX doesn't sell off in a meaningful way today, and when I say a meaningful way, I mean from, you know, 38 down to 34.5, I think that is a huge tell as we get towards tomorrow night's potential results, Dan.
Yeah, I agree. And so, you know, listen, one of the things I think the viewers who check us out on the macro setup, we know this is about macro, but we often like to kind of take a look under the hood and give you guys a little just kind of peek into some of the things that we're particularly, you know, focused on. We started, let's move from the VIX to the NASDAQ 100, because this to me is the big kahuna. We talked about the earnings last week. I'm just going to show you guys my screen a little bit. So Guy just said the S&P 500 is up 1.25% right now, or it's up about 1% as I speak. But what's leading to the downside right now? Amazon's down 1.3%. Apple's down 0.75%. Microsoft went from being up 1 and change, they were all up, to basically flat to down a little bit. These are the names that you really want to keep an eye on. Okay, here's the Ndx chart. This is the NASDAQ 100. I'm going to draw some lines, but look at that sustained downtrend that it has been in right now. And don't think for a second that this doesn't have to do with all the topics, the macro topics that we think are driving the market here. Look at the outperformance that all of these names have had, the biggest names in the market. If we were going to have a Biden administration and a Democratic Senate, you are going to have higher capital gains taxes going forward. So investors might right now be looking at these polls and the betting lines and saying, you know what? My capital gains on these stocks that have just massively outperformed are going to be possibly 40% if I hold them into next year versus 20% this year. And that could be what's going on right here. And you could see sustained selling for maybe a couple of weeks or so. And I'll just make one last point. And then you have the fundamental headwind, no matter who wins, of increased regulatory scrutiny on these names. That's why they're important looking at the NDX. Guy, I'll let you speak to the chart. I have the chart right here. I drew one line. What other lines do you want to see? Give us some support, give us some resistance, and some levels you're focused on.
Well, let's just take a look at this uptrend that you drew. Obviously, from the March low, you saw a significant uptrend that then was subsequently broken, and you see where it breaks. And one of the things we said, again, you know, I'm not playing revisionist history here. I'm not, because I'm wrong probably more than I'm right. But in this case, this is one we got right. And what we said was, you're probably going to see a bounce in the NASDAQ, and it was going to retest that uptrend line. It wasn't going to make a new all-time high, but it was probably going to trade either side of like 12,100. So I think the prior all-time high in the NASDAQ was 12,400. And effectively, that's what happened. It traded back up, touched that line, and seemingly it failed. The support is pretty obvious. It comes in that horizontal line that Dan's about to draw and is just drawn. That's your support level. I mean, and this is, to me, you know, a textbook. We call that a back and fill in terms of how it traded up to those levels. I mean, use any terms you want. But, you know, Dan mentioned some individual names. And you know, folks, the NASDAQ is driven predominantly by the FMAGA complex. And you see the support in the NASDAQ. But, Dan, we're not playing stock market. But I really think you should pull up Amazon because, as you pointed out last week, you're talking about the potential for a textbook head and shoulders, and you're probably seeing extraordinarily similar in Microsoft. So if you look at Amazon real quick, you have that all-time high, subsequent sell-off, retest to the high, seemingly failure. And I will tell you, and you can look at this quickly, you know, if you break that low that we saw probably in early September, you have to start to wonder where the next support levels are. But that's how you have to be looking at these individual names. And quite frankly, I think these individual names are going to give you a great tell as to the broader market in the form of the NASDAQ, Dan.
Yeah, so Guy and I are obviously not certified technical analysts or anything like that, but Guy's been doing this, drawing lines on charts for what, 50, 60 years in this business.
Yeah, it's going to be 58 years next week.
I've been doing it for 2 years. You know, I'm a newbie to this thing now. I'm just kidding. But here's the thing: it's pretty simple. Carter Braxton Worth on our show says it all the time. If you can draw a straight line, you're going to be okay in this business. I just drew a line. This is an Amazon from that March low. I nicked that low, the intraday low in September, and look what we just broke on Friday after Amazon reported a massive number. So it's gapping down there, and your next target is this kind of 2865 level or something, which was the September low. Why is this important again? If the major components of this index, is breaking down, and Microsoft looks basically the same way,
eerily similar, as they say.
Yeah. I mean, look at that. They're like the same chart, right? Yeah. And then let's look at this one. Let's look at Apple. Okay, so you know they're breaking these uptrends. They're trading very poorly with good fundamental news. That's usually a tell that people are kind of full up in these names or so. So you know, just keep an eye on those sorts of names. We are.
You have to keep an eye on them, and it's important. And I'll say this, and I mentioned it on the show last week. Google, Alphabet, whatever, you know, the home folks are calling it these days. That quarter was a remarkable quarter. And I will tell you what I said on the show, I believe it was Thursday night.
Yeah.
Google rallied about 11% in terms of the Wednesday's close, Thursday's price action during the day, and the subsequent rally in the after hours. And my point was, you can make an argument that despite the fact that the stock rallied 11%, it was actually cheaper on a valuation basis than it was 24 hours earlier. And that's really a function of the ridiculously strong earnings report. That's all great. Here's the problem. You still haven't come close to the all-time high we made. And that, to me, is somewhat concerning. And again, you look at the Google chart. It's not exactly what Amazon is. It's not exactly what Microsoft is. It's not what the NASDAQ is. But you know, if you can't take out those all-time highs, that's concerning as well. Dan mentioned Apple. He showed you Microsoft. So all the things are lining up. You try not to be dogmatic in these things. You try to read the tea leaves. But Dan said something really important. Good news, bad price action. In our world, folks, that's a tell.
Yeah, let me just make one other point before we move on to some other stuff, Guy, just on the NDX. You know, one of the things that I find pretty interesting about the NASDAQ in particular is that, you know, I think it's really important to remember that these stocks, after, you know, a lot of things like took off after the 2016 election outcome, the surprise election outcome, you know, the NASDAQ kind of banged around a little bit after the election. So for whatever that's worth, I think that the investors were pretty unsure about what regulatory might look like. It took a lot of years for that to become a thing. All right, let's move on, Guy, a little bit. You know, we spent a lot of time talking about election. We saw about earnings. Obviously, the pace of the coronavirus is going to be really important. We're seeing lockdowns in the UK and other parts of Europe. Obviously, the first thing that reacted there was crude oil getting hit fairly hard. It's kind of now unchanged. Let's talk about what the pace of the virus means for economic growth globally. You know, we're at a point now here in the US where we're months in between the latest bout of stimulus. What are some of the things that you're looking at on a macro level? You know, and is it rates? Is it the dollar? And let's just kind of chart these and kind of give some thoughts.
To me, it's the rates and the dollar go hand in hand, and that's a good thing and a bad thing. But if you can just pull up, you know, what Dan and I look at in terms of levels is the TLT, and I know for you folks at Nadex and IG, it's different instruments, so we totally get it. But I just want to pull up the TLT real quick because there's a definite line of demarcation, and it comes in the form of that 155 low that we saw, I believe. If memory serves me, it was in June or so or thereabout. But whatever that 155 or low, there's your line in the sand. And in terms of that level, it probably coincides with about 90 basis points or so in the 10-year yield. I understand that the TLT is not the 10-year. I get it. Please don't at me, as they say. But they line up pretty closely. So The 155 level in the TLT is huge level of support. And again, that probably comes in the form of 90 basis points or so. You have to watch that. Everybody will tell you that a move higher in rates is somehow augurs an improving economy. And maybe that's true. You know, the ISM numbers we saw today were pretty strong. And some of the numbers recently have been pretty constructive. But you're also talking about Europe that's on the verge, if not closing down. They led us back in March. Maybe they'll lead us again. You know, again, this is not political at all in terms of my views. It's just reading the tea leaves. So if you were to see this second potential shutdown, not necessarily here, but in terms of the businesses doing it on their own, I think that's really problematic for an economy in the U.S. that's 73% driven by the consumer, Dan.
Yeah, so going back to the 10-year Treasury yield, you know, we saw in early June that huge move from about 60 bips almost to 1%. And then not only did it quickly fail, but then it ended up making new lows. And I think it's interesting to think back about that period is that there was all this talk about the reopening of the economy, and it was really on expectations of greater growth than people expected, but that kind of fell by the wayside really quickly. So what's going on right here with this move up higher in rates, you know, it might have, like you said, had something to do with expectations of the stimulus bridging the gap to vaccines, the vaccines bridging the gap to just reopening everything, getting everything back going. And, you know, that doesn't seem to be the case, except for the fact that stocks are acting okay, despite, you know, the news of the lockdowns in Europe over the weekend, that sort of thing. I mean, to me, you know, I would be very worried about the 10-year Treasury yield failing here, which, you know, that would speak to the fact of, you know, we just didn't get the timeline right on vaccines. We didn't get some of the mitigation facts right. You know, I will just say this, that, you know, the mortality rate is far lower than it was in the spring, and that's really good news, but cases are exploding, and it seems to be in this country in particular, we have a bit of fatigue about those mitigation efforts. So if you're trading the TLT here and you think rates fail, and that 10-year Treasury did fail last week at its 200-day moving average, you know, then if you think rates are lower, that means TLT higher. And I just want to draw one line, because we like drawing lines on these things, don't we, Guy?
We love the lines, Dan.
Yeah, you have this fairly well-defined downtrend from the August highs. So, you know, Guy's saying that intraday low in June was 153. I think it closed at 156. But if you were going to have rates get cratered, you know, the move back is to this 170 level or something in the TLT. And for those of you who like to trade options, TLT is usually some fairly cheap vol in terms of that, whether it be, well, it's got a lot more expensive of late.
And look, I mean, you could see a move like that in the form of a flight to quality. We saw it obviously in March when the market cratered. There was a flight to quality in the TLT. There was also a flight to quality in the next chart that you have up, the dollar index. And, you know, you go back again to March, you saw that huge spike in the dollar. And that was in the form of exactly what I just said, this flight to quality on the back of global equity markets that were getting crushed. But that proved to be the wrong move, and that proved to be somewhat short-lived. And then you saw a pretty precipitous drop. You're seeing this flight to quality now in the form of the US dollar on an equity market that has sold off. I think that is misguided as well, but it doesn't mean it can't last for a duration of time. So, you know, if you were to see a big move into the dollar on the back of whatever outcome that the market, the equity markets don't like, you know, I think there's going to be a huge opportunity to sell the dollar if you're long it to take profits, or if you're looking for positional trade or directional trade to sell it for the next leg lower, which, by the way, I think will come regardless of the outcome, because I do think you're going to see a huge fiscal stimulus move by either candidate, which to me is going to be dollar negative. But that's just my views, Dan.
Okay, well, that's good. I mean, you know, that short-term trend line to the downside, you know, the downtrend just got broken there on a near-term basis. So if you were to fail there, you're looking in the Dixie, a retest of the kind of 92 level or something like that. And then there's that air pocket back to the early 2018 lows. I don't have a strong view on it. But we have a question from Kevin, who asks, what do you think of gold here, Guy? You're like a gold bug. You've been trading this thing for decades here, and this is kind of related to this whole conversation. So let's get into it. Do you want to look at the GLD?
So the bears will say, yeah, absolutely. The bears will say that, you know, this sort of 1900 level or so it was, we failed and it's given up the ghost, and it's, another failed rally, and the gold bulls are going to be disappointed.
Wait, is it
once
giving
again.
up the ghost or the goat?
I say the ghost. Is it goat?
Nah, I don't know. I'm just saying.
I don't know either. But,
whatever.
But look, obviously a lot of the move lower coincides with the fact that the dollar's been rallying as well. So I see what's going on for sure. I just think people are missing not the goat but the boat in terms of the gold trade, because I do think it comes down to the fact that global central banks have been hoarding the commodity itself. Global central banks are tripping over themselves to devalue their currency against everybody else's. And in the end, the only winner is gold. Obviously, people will say that, that's what the move in Bitcoin has been about, and Bitcoin might be taking the lead from the gold market. I would disagree with that. I think we're right up against the level of support again in gold, and I do think we're going to take out that downtrend line that Dan has just drawn. So I traded it for a long time. I don't have tinfoil on my head. I understand why people would be bearish. If you think the dollar's going higher, that's going to prove to have some headwinds for the gold market. I think the move in the dollar is short-lived, and I think this move to the downside in gold is a buying opportunity, Dan.
Okay, but so let me just kind of flesh this out for a second here, because to me, we've seen a lot of positioning in the options market and we've seen equity volatility, and we've seen volatility on the risk assets, obviously rates, dollar. We're talking about all that right now. Why is it that gold has just been banging around the last month between 175 or the GLD in particular and 180? And to me, you'd think that would be something. Is it that the money just flowed into Bitcoin? Because I could show you a Bitcoin chart, which it had this huge ramp here. And to me, I just don't think that a lot of traditional buyers of gold, as a flight to quality, are like getting in the Bitcoin market. You know what I'm saying?
No, I mean, look, yeah, it's different animals. I think you make a fair point. The question is, why is gold, underperformed? And if you go back and look historically, when you have big down moves in the equity markets, you would have thought, or you would think intuitively, that would lend itself to a move higher in the gold market. What typically takes place over a certain period of time is they move in tandem. So if you have a big sell-off in the equity market, you historically get these big sell-offs in the gold market, and then one decouples. And I think the decoupling is going to be the form of gold to the upside. Again, that's just my view. That's what we've seen historically. But as they say, Dan, that's what makes markets. So obviously last week was a miserable week for the equity market. It also happened to be a pretty miserable week for the gold market. I do think, though, that decoupling is going to take place. When you shake out a lot of the weak gold longs, it's going to put in a base, I think, right around the levels we are now. And I think, again, next leg in the dollar, although maybe short-term higher, I think the next major move is lower, and I think the next major move higher is in the gold market, Dan.
All right, so let's just finish up this conversation.
Wrap it up, as they say.
A little bit. I'm gonna stop showing my screen. I probably made everybody a little dizzy there. With my charting, but Guy, you've gotten used to it. You're always looking over my shoulder at Fast Money on the desk there and seeing what I'm doing.
Yes,
it's really what we call the answer key a little bit on the levels. Okay, so let's just kind of wrap this up here as far as election and potential outcomes. I think a lot of smart investors have hedged up. I think they've taken some profits and some big gainers, and we're seeing that obviously in some of the NASDAQ stuff. As far as there was some open interest data in the options market saying that bullish bets in the S&P 500 are gotten to levels they haven't seen since January 2019, which was right after that really sharp decline in the end of 2018. So I think people want to be bullish here. I think it's that one outcome where we have a protracted contested election. That sort of uncertainty will not be good for markets. And so I think the best case scenario is my personal view, and it's not political or anything like that, would be a decisive win. And I think the decisive win would come in the form of an upset for Trump, or it would come in what the polls are suggesting for Biden, but decisively flipping the Senate. And I think in those two scenarios, you probably have a market that acts okay. You might see some unwinds of some trades, that have been pretty commonplace in the last couple of months, but it's really the contested one for me is the problem for risk assets. What about you?
Yeah, a concession speech by either candidate tomorrow night probably takes the VIX from this 38 level, which we're right around unchanged, by the way, in the VIX, despite the fact that the Dow's up 400. I think it takes the VIX from 38 probably down into the low 30s, if not the high 20s. I think that takes the wind out of the sails of the VIX. The other outcome, the one that you mentioned, a contested election where you see the vitriol, where you see the lawsuits and those types of things, is probably the reason the VIX is so stubborn here at 38, and probably the reason that in your scenario, Dan, it takes the next leg higher. I would submit the move up to 40 is on the back of that. I think Dan suggests that it hasn't priced it entirely in, but folks, that's what they say makes markets. So with that, Dan, I want to bid you adieu. I want to thank the folks at Nadex for putting this on. Thanks for turning it around so quickly, and I want to thank everybody for spending some time with us, Dan.
Thank you. Thanks, Guy.
See you later.
All right, well, Guy and Dan, I just want to say thank you so much for that. That was awesome. Great analysis. As we wrap up, I would be remiss if I didn't at least show you that there, if you were on a Nadex platform, we were looking at gold. We do have knockout contracts for some great short-term price action. And if you're not familiar with Nadex products, by all means, please take a look. We've got plenty of education on our website to help you in that journey. Again, this was being recorded. And the one last thing I was going to bring up, because we mentioned it at the beginning, and here's your opportunity. If I share this, if I can do this, I wanted to put up the predict the Dow, but there we go. I've got it. The slideshow. There we go. Remember to put in your guess. Today is the last day that you can predict the Dow. Go predict the Dow, give it a shot. Your chance to win $5,000. A little fun. If the elections aren't exciting enough, add a little bit more excitement. Maybe you win $5,000. Guy, Dan, thank you again for your time. Want to wish everyone else good luck in the markets.
Thanks, guys.
Folks.